You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is time to hold court on all things futures options. Yes, it is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a good trading week out there. Remember, if you want to keep the party alive, you want to join us right now for this trifecta of content, this triple header that's coming at you, including options oddities coming up immediately after this program. You want to get your name in the hat for the giveaway that's going to go up pretty soon because January drawing to a close. Only one place to go to get all of it. theoptionsinsider.com/pro is the place to go to learn more, to kick the tires and light the fires. Welcome to all the new folks who've been joining us over there to kick off the new year. As we kick off the new year yet again here on TWIFO and High Style, welcoming back now our old friend for the first time here in the new year, Miss Carley Garner from DeCarley Trading. Carley, welcome back to TWIFO. It has been too long.
Hi, Mark. Good to be here. Absolutely. It's been way too long.
How are things going in the land of DeCarley? How's this wild new year treating you so far?
You know what? We've had an entire year's worth of chaos in 30 days.
It's been insane. It's been insane.
Yeah.
Last time we chatted, I think I said, beware, January kind of comes in like a lion lately, and it is living up to that right now. So
it is.
Wild times. We got a lot of wild fun in store for you listeners. Let's get to it. A little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report. And as we were just alluding to with Carley, we're talking about what's moving and shaking right now. Spoiler alert, it's everything. It's a banger period out there. We'll get to all that fun in a second. But as I mentioned, this is Carley's first time joining us here in this wild new year of 2025, which means we have to start by looking back at the equally, if not more wild year that was 2024. Carley, we had a lot of highlights, a lot of lowlights last year. Carry trade sell-off in August, the election, all sorts of madness going on last year. what really stands out to you and resonates as you look back at the mad year that was 2024 in the futures and futures options world?
Well, obviously there's no shortage of things to talk about, but what resonates with me is the fact that, like, just going into the election, maybe a month or so prior, and then particularly after the election, we started to see very aggressive trades in certain directions. So you can call them the Trump trades, or you could call them whatever you want, but there was some real serious money going into, obviously, the upside in stocks, selling into treasuries, or maybe just liquidating in treasuries if you're cash market trader. But the weird thing in commodities, we noticed must have been some inflation hedges coming in. This could have been like just, very large trading accounts, algos, or maybe commodity funds. But whatever the case is, it appears that there were some inflation hedges going into corn, live cattle, and crude oil. And the reason I say that is they went from being freely floating markets, moving based on their individual fundamentals, to basically one asset class. They were moving with a correlation of like over 90% most of the time, meaning that it's as if corn and crude oil and cattle had everything to do with each other, and they really don't. So it tells me money was coming in to hedge inflation, and everybody's all positioned on the same side of the boat, and that worries me a little bit. Everyone's looking for higher inflation, lower treasuries, higher stocks. When everyone thinks the same is when I start to get nervous. So it's going to be an interesting year.
You're like me. Groupthink makes me nervous as well. So a lot to unpack. Carley, it's been a while since you've been on the show, so I'm not sure. You think you can handle movers and shakers, or have you completely forgotten how this works?
I might be able to handle it. Let's give it a shot.
All right, listeners. It's a wild week out there. I'm looking at the numbers right now. And again, if you follow us over there on Twitter, you can see this report for yourselves. One of the premium Bantix reports that we give to you folks completely for free because we like you guys and gals out there. If you look at that report right now, you'll see it's pretty much 50-50 red versus green this week, with one huge outlier on the red side. That is our dominant percentage mover for the week. You might be able to guess what that is if you've been listening to the headlines for the last few days out there. I'll give you a hint. It's one we talk about a lot here on the show. It's nigh on inescapable. But Carley, that said, you are our guest. I will turn the microphone over to you for a little bit of moving and shaking. You can start wherever you like, Carley.
All right. I've had kind of a rough week, so I'm going to start on the dark side. Let's see, number 5 comes in, lean hog. Whoops, I'm sorry. I messed it up already. I've took too much time off.
It has been a while. I knew it.
It has. It's been a long time. Palladium down 3.82%. There's a note here. Last week it was down 6%. So that's obviously a massive move. Technology sector down 4.5%. Oats down almost 5%. Rough rice down a little over 6%. And the big mover, as you mentioned, is, well, you didn't name it, but I will. Natural gas down 22.43% on the week. That's in addition to last week's almost 8% down. So that's a huge one.
Yeah, nat gas, wild times out here in nat gas. I keep trying to move away from nat gas on the show every week, but it won't let me. It's like a jealous ex. It keeps dragging me back, Carley. It's like, you're going to talk about me again this week. Here you go, another 22% to the dark side. Another million contracts on the tape. This product is just, I hate to keep saying explosive, but that's what it is. It's ridiculous.
There's a reason they call it the Widowmaker. Yeah, it truly is. It's a rough one.
Last year was definitely the year of nat gas on the show, and it looks like we're off to something similar again this year, listeners. If it's going to keep doing 22% a week, I don't know if we can deny it. All right, Carley, you kind of already gave away the lean hogs. You kind of spoiled it, but if you want to do the rest of it, by all means, go ahead.
Okay, so on the light side, this is obviously a little more positive. Lean hogs comes in at number 5, plus 2.71% on the week. KC wheat, Kansas City wheat, up 2.98%. Number 3 is consumer staple sector, up a little over 3%. Silver comes in at number 2, up almost 5.5% on the week. And platinum, number 1 at 6.21% on the week.
All right, listeners, a lot to unpack there. I will now spell Carley, let her rest from that Herculean effort on the movers and shakers while I break down a little bit of moving and shaking on the vol front. Remember, you can find these for yourselves. Just type CME and CVOL into any browser you're rocking. Go to the aggregates tab. Go to 1 week for the this week in range. We're going to actually expand that range a little bit in a second. You'll see what I'm up to in a second. But for the week, listeners, we'll kick things off in the ags. Vol's popping in the ag CVOL today, listeners. 2134, up 1.05 points just today. On the week, it's had a range of a little bit shy of 20, 19.97, and the high is right now 21.34. And since Carley was just looking back on the year that was 2024, you know what? I think we'll do that with CVOL as well. So let's look back on the year that was CVOL and all these products as well. And if we do that in the ag products, we've had a much wider range, obviously. The low for the year is actually 1693. So over 3 points below where it was just this morning. And the high was 2478. So fairly wide range in ag vol over the course of the past year. Below it, we have the metals coming in on the list today. Aggregate metals CVOL 1717, up about a tenth of a point today. Not a huge move today. For the week, it's at a range of 16.94 to the dark side, 17.35 to the upside. On the year, you know it's been a banger year in metals, so you can probably expect a pretty wide range, and that's exactly what we had on the year last year. Metals CVOL got as low as 10.96, listeners, and as high as 23.2. Obviously coming well off those highs now, but still a wild year in metals, which, again, if you saw the underlying movement, probably should come as no surprise to you. Below it, we have the aggregate commodities CVOL, 32.58 today. Kind of unched today. Its range this week, 32.55 to the downside, so pretty much pinning the needle to the downside for the week right now. The high 34.61. That's for this week. If we expand our purview to the full year, obviously a wider range there as well. The low was 28.51 to the dark side. The high 44.68. So commodities aggregate CVOL getting a little frothier last year as well. Below it, we have the treasury price volatility, about 6.25 today, off about 0.2 today. So coming in a wee bit today. It's had a range on the week of 6.06 and a high of 6.6. So hanging out kind of right smack dab in the middle of that range right now. If we look out on the full year, it's been a bit of a wilder ride out there in treasury price volatility, listeners. The low was about 5.25. So well below where we are even today, almost a full point below where we are today. And the high was 10.37. So 5.1 point range on the year. May not sound like much, but for treasuries, it's actually a fairly wide range. Below it, we have the FX aggregate CVOL, 8.57 today, off 0.26 today. So vol coming in on the FX land today. The range on the week, 8.37 on the low end, 8.87 on the high end, so exactly half a point range this week. If we go out to the full year, obviously a little bit wider purview. The low, 5.72, so about half a point above the low for treasuries. So neither treasuries nor FX known to be big bastions of volatility, and you're seeing that being played out in both of their lows coming in within about half a point of each other. The high also pretty close to each other. The high for treasuries on the year, 10.37. The high for FX, 10.59. So interesting, not quite a full 5-point range on the FX CVOL for the year. Below it, we have energy. You know energy was rocking and rolling last year, and it's rocking and rolling again today. 48.86, off about 0.4 today. That's the low for the week. The high was 53.29, so pretty wide range already on the week. If we expand that to the full year, yeah, we got a pretty wide range, listeners. The low was almost exactly 40.07. We're pretty close to that right now. And the high, 73.85. Pretty far away from that this week. But man, a wild range, 33 and change point range on the year. Again, nat gas is in there. A lot of quote unquote explosive products are in there. So you'd be forgiven for expecting a pretty wide range. That's exactly what you got. And at the bottom of our list, even though it is the largest number on our list, is treasury yield volatility. I know that gets a little confusing for people. Yield vol versus price vol. Obviously, yield vol, a little bit more explosive. It's at a 110.75 right now, off 3.25 points just today. On the week, range pretty wild as well. The low was 105.92, the high 115.97, so almost exactly a 10-point range, 10.05 points just on the week. Of course, we expand that to the full year. Things get pretty wild. The low was 90.42 and the high 169.23. So a wild year on treasury yield vol as well. Hope you enjoyed that walk down memory lane, but now we got to get going, listeners. And you know where we're kicking things off. We're going right to energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the, dare I say it, the oft-used, some might say abused pun, the explosive world of energy. Here we go. You know right where we're going. We're going right to nat gas. You know, normally when Carley's on, we start with nat gas anyway. I know she loves herself some ladders and some upside in nat gas. But today we really would have to anyway. It is just lighting up the tape. That front contract going away in 1 day. That's at a 3.04. It's off 40 cents just this week, or nearly 12%. Obviously, if we go out to the full week-on-week move from the show, it's off over 22%. I mean, it's just wild times. We're still north of $3, which is interesting because we've been shedding a lot of upside of late. Again, that bomb blast cyclone, call it what you will, added a little bit of a dust up to the price here. A lot of that coming back off now. If you're saying to yourself, is it a banger volume week in nat gas? The answer, once again, yes. Threatening 1 million contracts out there, 940,000 to be precise. So just an embarrassment of riches. I want to get into some of that paper. Before I do that, Carley, I know you watch a ton of nat gas when you're not talking to us. What's been catching your eye on this wild ride that nat gas has been on so far this year?
I do. So a couple of observations. You just pointed out how volatile of a year it's been for energies. But the ironic part is if you look at the chart, like charts of crude oil or charts of natural gas, the market really isn't going anywhere. We're having monster 1, 2, 3 day moves, but in the big picture, we're literally not going anywhere. So I think that's interesting. So the thing to note about that is trend traders in 2021, 2022 probably did very, very well. But if you're trying to trend trade in this environment, you're probably having a really rough time because trend trading signals tend to be slow. As far as natural gas goes, I think the ironic thing about the energies is I think the DeepSeek story, the Chinese AI app. I'm not an expert on that stuff, but what I can say is there was definitely a bid in natural gas and crude oil for many reasons, but partially because of the idea that AI would consume a lot of energy. And we seem to have that DeepSeek story probably is more bearish for energies than maybe it even is for the stock market. So keep an eye on that. I personally think natural gas, we may have some big bounces here and there, but I personally think we're heading quite a bit lower. In fact, probably well under $3 is my best guess. So if you're trying to be a bull in natural gas, be patient. You might see anywhere from 30 to 60 cents lower than where we are now. You might be able to get some good buys going into the seasonal rally, which is generally closer to April. So it's a little early to be a buyer, in my opinion.
Well, I have bad news for you, Carley. You're not going to like some of the paper I'm going to break down for you in a few seconds.
Okay.
I was just digging into it myself, and I was like, really? Is that what they're up to? But apparently it is. Let's get out there, listeners, right now. Like we said, nearly 1 million contracts on the tape, 900 and about 80,000 contracts on the tape. Of that, nearly 40%, 38.7%, going up in the March contract, has about 26 days to go. We will hang out there. The vol coming in a little bit this week, 55.25 off 3 3/4. Still pretty hefty, even though 55 is fairly low for nat gas. We just talked about the range for the CVOL for the year for energy. A lot of that comes from nat gas at the end of the day, listeners. We've seen nat gas threaten triple digits before. This is the only real product on the board out that can really threaten crypto from a vol perspective. 55 is actually fairly light, all things considered, from a vol perspective for nat gas. Skew, though, we're on a wild skew journey this week, listeners. Last week, the puts 2.5% cheap. This week, nobody wants them anymore. 8% cheap, despite what Carley was just selling. And the calls last week, 5.1% bid. This week, 10.3% bid. So the calls getting gobbled up. Nobody wants the puts as we're hanging out right around the 3 handle, which is kind of interesting. Some might say a little head scratching, especially when you see what the paper is that is driving this call wing, listeners. It is a whole bunch. The number one most active contract in nat gas options this week, the March 4 calls going up 60,000 times out there this week, listeners. Again, that's, if you go run the numbers, that probably is more than silver this week and some other complexes out there. So just in this one 4 call block here that went up this week. Just a ton of paper. The big day was actually Tuesday, 20,500 on Tuesday, 10,000 on Monday, 14,000 yesterday, and 15,000 today against an OI of 32,000. And, I was thinking what you were thinking, Carley. I was like, well, the momentum seems to be to the downside. So maybe they're overwriting the hell out of these things. But that does not appear to be the case. I've only had a chance to dig into today's paper. I can go back throughout the rest of the week as well and corroborate this. But it does seem like they are certainly buying them today, Carley, for prices around 18 cents in blocks of 100 after 100 after 100, 18 cents like clockwork. So it does seem like they are buying these, and the skew would certainly back that up. So, Carley, 60,000 of the March 4 calls. That flies in the face of everything you were just saying. What are your thoughts on those? 18 cents.
I have no interest in buying a single $4 call in March, but I'm looking at the $2 puts. They're about the same price and only 50 cents away. I think that's a much better play. But then again, we don't know what Mother Nature has in store for us.
Oh, you going to do a little risk reversal, sell the 4s to finance the 2 puts? Or is that too wild?
Honestly, I wouldn't sell an option for 18 cents. I wouldn't do it, but I'd buy those 250s probably all day long.
There you go, listeners. You like those March 4s for 18 cents? I mean, somebody's got a huge axe to grind on these bad boys out here. 4 calls across the board, lighting it up. We've also got 2 3/4 puts going up for size this week as well, also in March. 39,000 of those. These seem like they're more in Carley's wheelhouse. The big day was 12,000 on Tuesday, about almost 11,000 today against an OI of 37,000. 9,000 on Wednesday, 7,200 on Monday, opening all week long. I don't have prices for these. I'll have to go dig a little bit more. There's so much data to crunch for this show. Listen, it's hard to get it all. But Carley, I don't have prices on these, but I'm guessing you're a little bit more inclined towards these 2 3/4 puts than the 4 calls in March.
Absolutely. So the 275 puts are going for about $550. So around the same price. Again, I'm not sure I'd probably go with the cheaper option. I'd go with the 250s if I were going to play it. They're only $180, 18 cents. It either happens or it doesn't. So that's how I'd play it if I were going to. To be honest, we're sidelined. We're waiting for much lower levels to play the upside. So we're just letting the downside go.
You're an upside girl in that gas. That's what you want. Let the downside come, then you dive into those ladders that you love so much.
Right.
Maybe some bullish risk reversals up there. All right, let's see what else is lighting it up. Carley likes puts. We got a few puts on the docket. If you don't like the 2 3/4, you want to get a little bit closer to the fire, listeners. How about the 3 puts, also in March? 32, almost 33,000 of those. The big day for those actually Monday, about 11,000 on Monday, 10,000 and change today against an OI of about 30,000. A lot of OI on all these strikes, listeners. 5,200 on Wednesday, 5,900 on Monday. Kind of back and forth, opening to closing all week long, which makes sense. It's the at the money strike, so folks are going to be taking them off as you get a little closer there. And then Carley was just talking about the 2 half puts. They traded about 25,000 times this week. The big day, actually kind of a tie between Tuesday and Wednesday, almost exactly 7,600 each Tuesday and Wednesday opening there. 6,000 today against an OI of 38,000 and about 4,500 on Monday. So if you wanted puts, you got puts for days here in March. Listen, which of those do you like? You like the 4 calls or the roughly 2 half puts for similar prices? Which one floats your boat, listeners? Are you leaning the Carley way to the downside? Are you rolling those bones to the upside? Also shows you kind of the skew, which again, we were talking about how the calls are bid and the puts are discounted. You can get a $0.50 away from the at the money on the put side for the same premium level as $1 away on the call side. So that kind of shows you how wild the skew is out here. We also have the 2 half puts trading in April. They have about 55 days to go. They went up about 36,000 times this week as well. So it's not all upside, a lot of downside. Just the largest individual, most active option was all to the upside. 3 puts trading smaller in July and August as well, 8,000 times at a clip there. So yeah, it seems like we do have mostly puts, which you would expect, but I don't know, Carley, that 1 4 call print really kind of threw me off my game. It's not what I expected this week. That's why we do the show, right? We find weird oddball nuggets like that, Carley.
Exactly. And that's what makes a market. There's, nobody has a crystal ball.
There's always a weird oddball out there for all of us to trade against. at the end of the day. So there you go, listeners. If you want to sell some upside, this person is generously bidding it up for you. That's what they're doing out here. Since we're hanging out in energy, you want to take a quick detour into WTI? You want to go somewhere else next, Carley?
Crude oil sounds good. Let's do it.
To the world of crude oil we go. Just pop out of nat gas, go right up to crude oil, listeners. It's all there in that same energy category. Is it a banger week for WTI? The answer is actually yes. It's not putting up nat gas numbers, but 685,000. It's been a while since we've seen WTI put up more than 450,000. So that's actually a pretty active week. In terms of price, we're at about 72 3/4, and that front contract going away in about a day. It's off about $2 or about 2.5%. Obviously, if you go back to our show last week, it's off a little more. It's not quite enough to break into our dark side bottom 5 this week. Let's see if I scan really quickly. Can I find... No, that chart's a little too small for me to see, listeners, but it's in there. There it is. WTI. It looks like it would actually be, let's see, 2, 4, it'd be number 7 on our bottom list, our dark side list this week. So just outside of our bottom 5 this week. But Carley, it's been a wild time in WTI. Back to the low 70s. You know, we got a new administration coming in, talking about drill, baby, drill. We see Saudi Arabia starting to get cozy with the new administration. So it doesn't seem like that's a strong argument for upside in the near future in WTI. But what's catching your eye out there?
Nope, I tend to agree with you from a fundamental basis. I think crude oil is poised to go lower. We have a higher dollar, high interest rates. None of those things work in favor of crude oil. We saw a break, like basically since the March 2022 highs in oil, we've seen nothing but lower highs. Every time the market rallies, we give some back, not necessarily more than we did before, but the rallies have been progressively lower. And so we're obviously in a downtrend. Over the New Year's Day, New Year's Eve holiday, we broke above that downtrend and suckered a lot. I don't want to say suckered. That's the wrong word. That wasn't nice. It lured a lot of buyers into the market. We got a really big run up. I just mentioned earlier in the show that a lot of the buying in oil was also happening in crude oil and live cattle exactly the same times, exactly the same pace. So to me, it was very suspect. But we did hold the 200-week moving average, which is 80, and we've started to sell off from that pretty sharply. And now we're kind of at the crossroads. 73 is where that downtrend line comes in. So previously it was resistance, now it's support. If we break through 73 this week or early next week, I think it opens the floodgates and we go much, much lower. But if you are a bull and you want to be a buyer, 73 is kind of the place to key off of because this is pivotal. And if it holds, that's pretty bullish. I don't think it's going to hold, but we won't know till we know.
Yeah, so much fixation has been on supply, right? We're gonna open up the spigots here. What's Saudi doing with their production? We haven't really heard the demand side of the story yet. Obviously, that's key. So we'll see what's going on out there. As you know, Carley, we are talking about this bearish story potentially in WTI. Well, I'll get there in a second, but wild stuff out here in a minute. Maybe some surprising paper in WTI as well. I said about 685,000 contracts on the tape. Again, about 38% of that going up in the March contract. This one has about 15 days to go, so a little bit closer to home on this contract. The vol out here, almost a 30, 29.3, up about 2 3/4. So vol getting a little bit spicier in WTI when it's coming off in nat gas. That's kind of interesting. Skew-wise, the puts are where the action is right now. 2.8% bid were the puts last week. They're 5.4% bid, so nearly doubling. The calls, nobody wanted them last week. They were pretty much flat. This week, they want them even less, 2.6% discounted. Now, that said, the 80 calls were the big dog out here in March this week. I just want to go up and see if I could find where these prints are going up out here. I was looking, Wednesday was the big day, trying to see if I could find where these 80s were trading, because they were trading quite a bit, 80s. Let's see, they traded $2. Paper was buying them. These are the Dees 80s, but the 80 strike still looks like pretty popular on Wednesday. Well, again, there's so much data list. I could spend the rest of the show scrolling through here, but the 80 calls were the hot option this week. Maybe kind of flying in the face of everything we're just saying here about it. Seems like the narrative is to the downside, but then again, maybe if you're contrarian, you're feeling a little bit of upside. Paper was opening in the 80 calls all week long. The big day was yesterday, 12,400 going up yesterday, all opening About 6,500 on Monday, about 4,000 on Tuesday, only 2,000 today against an OI of 28,000. Carley, we know in the past when folks are opening to the upside in crude oil, they tend to be buyers. So it seems like that is the case again this week. Again, I'm trying to dig here to confirm that, but I don't know, 80 calls, Carley? This seems like we have eerily reminiscent paper in both nat gas and WTI this week. I guess you can call them maybe stubborn bulls. What do you think?
Yeah, I think they're wishful thinking. Like I mentioned, 73 is pivotal. It's possible we hold, and if it does, that would be very bullish. And 80 is probably a good place to be because that is the 200-week moving average. I personally think the risk is to the downside. But that's what makes markets. So we'll see how it goes.
I'm looking here throughout the week. Looks like paper sold some of them, a 200 lot for $1.24. This was on Tuesday, listeners. At least we know the prices. These were the May contract as well. These weren't March. So trying to drill into here we go. March was trading for 19 cents. So again, Carley, it's that magical price, 18, 19 cents. Maybe some fund just decided that is their upside price, and they decided to buy all of the 4s in March in nat gas and the 80s in WTI. What do you think? 18 cents across the board. They're just buying it all up, Carley.
Yeah, that's interesting strategy to me. I mean, the thing about those types of trades is obviously limited risk, low risk. If it pays off, it could be huge, but the odds of it paying off are so slim. It's not really the way I'd approach it, but to each their own.
Yeah, looks like they were definite buyers of the 80s, at least on Tuesday, for 19 cents. So listeners, that's apparently the magic price level, 18, 19 cents, and it's also buying to the upside. So I don't know, kind of flies in the face of everything we've been hearing. Again, I'm a contrarian, so I could see a good contrarian trade. I don't know if I'm buyers along these lines. The March 8th, these only have 14 days to go, listeners. We haven't seen a whiff of upside in WTI for a little while. 2 weeks to threaten the 80 handle? I don't know. I've seen wilder things, I guess. Could be hedging against a short futures position, obviously, but probably not. It's wild stuff out here in WTI and nat gas. I guess we can call it potentially the forlorn hope of some relentless optimists out here. Listen, I guess we'll find out. Carley, we've already been gassing on, pun intended, about energy a lot. We got time for another product or two. Where should we go next?
Should we talk about the meats?
Ooh, meats. All right.
Live cattle? Yeah.
To the world of livestock we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the wild and woolly world of ags we go. Then we have to dig down a little bit because we're not going to our usual stomping grounds, not to the grains and oil seeds. No, not this week, not to soybeans. Nope. We're going to the meats, as Carley says. In particular, we got our old pal, the one that Carley spoiled for us early on in the show, lean hogs, coming in number 5 to the light side this week, up 2.71%. It's been a little while since we drilled into the old hogs. Again, go into the ags and then go down product family almost to the bottom of the list to livestock. And that is where you will find both live cattle and lean hogs, listeners. And let's see. Yeah, this used to be a product that really wasn't worth mentioning on the show because it never really did much paper. If you heard our conversation with Derek Salmon from CME a couple of weeks ago, he kind of mentioned products like this starting to come online. Copper is one of them, but also the livestock coming online. 75,000 contracts on the tape. Now, again, I know nat gas can do that in one strike, but again, that's rivaling some of the big precious metals you might talk about, like silver and others out there. So lean hogs starting to become a player. Dare I say it, Carley? What's catching your eye out there in the meats, as you call it?
Well, to be honest, I'm kind of surprised that hogs are outpacing cattle on a percentage basis. And the reason, maybe it just feels like cattle are rallying harder because we're on the wrong side of it. But cattle are putting in all-time high prices, and we're wildly overstretched. All the funds are long, all the specs are long. So it feels like an accident waiting to happen. And I think the hog rally is just kind of in sympathy to that. The idea is if cattle prices which is beef, when we go to the grocery store and we buy beef, it's the same as, it's basically represented by the live cattle market. If those prices are very expensive, people turn to pork products. And so that's why that's my theory on why hogs are rallying this week. But if you're short cattle, it feels like cattle are rallying more than hogs are on a percentage basis, but I guess that's not actually true mathematically.
Let's see what's lighting it up out there. Listen, like we said, 75,000 contracts in the hogs, and because Carley loves the cattle so much, we'll dip into those as well. Like we said, that front future 84 and a quarter, and if we go out, that's the Feb future. If we go out, the most active contract or month, I should say, is actually the April expiration cycle. 31.6% of the paper going up out there. That future's at a 91 and 3/4, and it's the 95 calls leading the dance out there in April, going up about 2,800 times, including about 1,400 yesterday, all opening all week long, about 750 today against 3,300 OI. So folks clearly loving themselves some 95s to the upside. Again, 3.25 points out of the money. Carley, are you down with a little bit of the April 95s? Is that a month in strike that you like?
April 95s. Actually, I think that's a pretty good place to be. The hog market, as you mentioned, liquidity has gotten a lot better and volatility is generally low until it's not. And so honestly, buying some relatively cheap options is probably the best play on the board in hogs.
And since you mentioned live cattle, we'll hang out there as well. 204.5 in that front future in cattle, off about 1/4 point this week. So not a huge move net on the week, but action nonetheless. In terms of paper, wow, live cattle saying hold my bear, hogs, 193,000. That's threatening gold options numbers out there. That's again, livestock come into play these days. 190. These used to be by appointment markets not too long ago, listeners, and now here we are, 193,000. Dare I say it, that is a market that a retail person could potentially wade into and get some liquidity as a result if you are the fearless few who want to dive into the meats. There you go. There's some paper for you, listeners. 193,000 contracts, listeners. The lion's share of that, 59.3%, going up in the March contract, has about 36 days to go. Might be asking, what is the vol in live cattle? It's about a 15.5, up nearly $3 in that March contract. So a banger month. It's got a weird term structure here, listeners. If you go out to the next contract, the April contract, that vol's at a 9.3, off 3 3/4. So obviously looks like some spreading activity going on between these months. People are crushing the hell out of April and buying March. In fact, looks like that is where, like I said, 36.8% of the paper going up in April, and it's the par puts, the 200 puts, going up 7,000 times. That is leading the dance out here in April this week, listeners. Again, the big day actually today, 2,500 of those going up against an OI of 6,400, 2,000 on Monday, 1,500 on Tuesday, slightly closing there, opening on Monday, and 830 on Tuesday. So folks, looks like they're playing close to the fire here. We're at 201.5 in that future. They're trading a ton of the 200 puts. Carley, is that a strike what you're down with, or is that maybe a little bit too close to the fire for you, the 200 puts in April?
So I generally wouldn't buy in at the money. What we're doing, and no surprise, is risk reversal. So we're selling calls and buying puts in these markets. But the really great thing about the meat markets, whether you're talking about cattle or hogs, that most people don't realize, it actually is become a nice place for retail traders because the options are pretty cheap. So you just mentioned the 200 put is very popular. It's right at the money. That's only $1,900 based on the settlement price, and it has 64 days. There's very few options on futures markets where you can buy an at-the-money option with 2 months to go for less than $2,000. So it's actually a really excellent market for beginning speculators.
Yes, a wild market indeed. And we are coming up against it, listeners. We have time for one more product category. You know what? Uncle Mike was just on talking all about his silver. Our chat was all obsessed with precious metals. So I think we'll wind things up in the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the wonderful, the shiny, the upside-heavy world of metals right now. If you're listening to Carley breaking down the movers and shakers, number 2 was silver, up 5.43%. Number 1 was platinum out there. So things are certainly getting precious out there this week. If we head on into our beloved silver, is it lighting it up? I guess 65,000 contracts, that's pretty good for silver. But then again, we just said live cattle doing over 3x that. Actually, almost exactly 3x that. 195 versus 65,000. So 3x. That is wild. So yeah, that's the kind of market we're in. If you turn your nose up at the livestock markets, listeners, but you love a lot of silver, live cattle's doing 3x the volume right now. So I don't know what you could say about that. Wild times out here. Carley, what's catching your eye in the world of the shiny stuff these days?
Well, obviously, we've seen a massive run in gold, and we haven't pulled the trigger on anything yet, but the higher it goes, the more bearish we get. So we're waiting to see if we kind of press up against 2,900, maybe even a little higher than that. But I don't feel like these are sustainable prices. Of course, anything can happen. But the nice thing is if you're a premium collector or if you're someone that trades option spreads, the calls are very expensive. That's what happens in gold. When gold has a big up day like this, the calls get wildly overpriced, and you can either collect a lot of premium for deep out of the money options, or you can sell those options and use it to buy some puts if you're trying to play the downside.
All right, we know past this prologue, listeners, a lot of folks just loading up on upside in all of these precious metals. Let's see if that's the case out here in silver this week. 32 and about a half is where we're hanging out right now, up about $1.30 just this week, or a little over 4%. Obviously more than that if we go back to the end of our show last week. About 51% of the silver paper is going up in March this week. The vol in silver right now, 31.3, up about 3.5 points. So things getting spicy in silver land from a vol perspective. As we would expect, the calls are bid, the puts are offered. 9% bid are the calls this week. 6.6% discounted are the puts. So once again, all calls all the time, and leading the dance this week are the March 32s, going up about 2,500 times. The big day was Wednesday, 1,000, almost 1,100 on Wednesday, all opening there. 767 today against an OI of 1,700, about 400 on Tuesday, 300 on Monday. So folks loving themselves some 32 calls in March in silver. And since Carley was just talking about the big dog of the metals complex, which is gold, we will shift gears out there as well. Gold looking a little more active, 302,000, so it's managing to outpace live cattle today, just barely, only 100,000 contracts. Just the fact that live cattle's even in the conversation is kind of wild to me. But gold, again, hitting new all-time highs, 28.43 right now as we're talking, up about 36 handles just this week, or about 1.3%. Again, 302,000 contracts. That's a pretty robust week. We usually expect gold around 225, 250, somewhere in that ballpark. And the March contract is where the action is this week, listeners. 28.8% of gold going up out there this week. You might be asking, what is gold vol? 15.5, up about exactly a point this week in the March contract. So gold vol looking a little bit spicier out here this week. Interestingly enough, I think just we're coming on the heels of this big upside move, we're actually seeing that call wing bid come in a little bit in March, and we're also seeing it in February. Actually, we're seeing it across the board in April as well. So, we see that sometimes, listeners, when you hit the apex, when you hit just the, a new all-time high in a product, even the bulls have to take some profits off the table, right? So it seems like we're seeing some of that because the bid in all of these call wings is coming in, and you don't see that too often in the shiny stuff. Like the March calls last week, 7.2% bid. This week, 4.7% bid. If we go out to April, the calls were 6.4% bid. Now they're 4.6% bid. If you go a little bit closer to February, they were 8.3% rich last week. This week, 4.5% rich. So that does seem to support the narrative that we're blowing through strikes to the upside. And even the most optimistic gold bugs, they got to take something off eventually. And that's what they're doing out here. We got the 28 half calls going up in March, 5,100 of those. But actually, the big dog this week is going out in April. April 3000s, trading 7,400 times this week. So usually we would say people are probably buying these. But given how the skew is performing, that they could be, in fact, dumping some of these. The big day for these, 3,300 today against an OI of 64,000. So again, given how we don't know what's going on with today exactly, but looking how the skew is looking, it's a good chance it could be bailing on these. 2,200 on Monday, mostly opening, 1,600 on Tuesday. So yeah, it does seem like maybe even the gold bugs. Carley, what are your thoughts on, I won't say skew is collapsing because that's overblowing it, but we don't see skew come in that often, yet we're seeing it kind of across the board in gold. Maybe a sign that even the most optimistic bulls are kind of exhausted. Carley, what do you think?
Well, I think there's probably a lot of truth to that. I mean, the reality is I shouldn't say reality. In my opinion, we're probably in some sort of a double top scenario. That doesn't mean we can't go 50 to 100 higher. Gold is a really wild market, and so we can just expect volatility. But in the overall scheme of things, the vast majority of people are already very long. The market's positioned for prices to go up, and sentiment is overwhelmingly bullish. It almost feels like the exact opposite of a couple of summers ago when gold was trading 1,800. So I feel like we're very, very toppy up here. I'd like to also kind of clarify what I said before. Nobody should be selling gold calls unless they truly know what their risk tolerance is and what they're getting into, because it's definitely not for everybody. It's a very aggressive way to trade gold. But another point is we're talking about at the money options with 60 days to go and live cattle being $2,000. Just to give you an idea of how difficult gold is to trade, an at the money option is about $7,000. So there's a heck of a lot more risk and reward in gold than there is live cattle. But sometimes that market's a little too hot for people to handle. So nothing wrong with live cattle.
You know, it's weird times when we're saying gold is a little bit quieter than live cattle, but a little bit easier to trade than live cattle. But you're right, certainly from an outlay perspective. You can't argue with the numbers at the end of the day, and you can't argue with the fact that when the music hits, listeners, that means we are done with the show. You know, but if you're hanging out in the live, if you're hanging out in the pro, don't go anywhere. I'll be coming back right after TWIFO to talk some weird and wild paper, an early edition of Options Oddities. What's lighting up our tape? Man, there's a lot. So stay tuned. Let's hope my voice can make it through triple headers back to back. We must like you folks here on the network. Remember, if you want to join all the fun, only one place to get it, theoptionsinsider.com/pro is the place to go to learn more. And before we get out of here, Carley, we've been playing our fun VIX guessing game for the year. We did it all at the beginning of the year. Of course, we haven't had a chance to talk to you till just now, so you get a bonus. You get a whole extra month under wraps before you have to make your vol prediction. So Carley, you played with us last year. I think you were within like the, I'd say, upper third of prognosticators. You weren't the bullseye. We did have one bullseye winner, but alas, it was not you. Maybe you can make up for it this year. What are you feeling end of the year? Where is VIX cash going out this year, Carley?
I'm going to say 18.
18 even. Wow. Okay, you're feeling a little spicy too. Any reason why?
We're coming off 2 years of spectacular stock market returns on low volatility, and that doesn't seem to be something that we usually get 3 or 4 years of. So just playing the odds.
Yeah, you're not outside the realm of probability. Our audience is actually feeling more. We polled our audience, and 33%, Carley, said north of 20 to end the year. So they're even above you. So our audience is feeling a little bit spicy as well. Dare I say it, ghost peppery. So listeners, Carley's at an 18. We will add her to the list, to the docket. I will, not to toot my own horn, but I was the second closest last year. I think I was about 0.3 away. So I was pretty darn close. Not within our margin of victory. That award goes to Mr. Steve Sosnick, who hit it within 1/10 of a point. That is impressive. But I was close. I'm dialing in my model, listeners. We'll see how close I get this year. But that is going to do it for us on the old TWIFO program this week. Meanwhile, Carley, if folks want to discuss your takes on nat gas or live cattle or anything else, where should they go? What should they do?
You can find me, and you can also sign up for a free trial of our newsletters at DeCarleyTrading.com. It's DECARLEY trading.com. I'm also on X, at Carley Garner.
There you go. Give her a follow. Good stuff over there at Carley Garner. If you want to talk the meats, you want to talk nat gas, you want to talk crude, anything else floating your boat out there, it's a great place to go. Check out her books while you're at it as well. Lots of good reading there. And of course, if you want some more good reading, head on over to cmegroup.com/TWIFO to read a whole bunch of TWIFO reports. While you're there, you can check out all the other research, all the other educational content they have over there at CME. You're going to go down a rabbit hole. It's a fun one, though. Kick it off, cmegroup.com/TWIFO. That's going to do it for us on the on-demand side. But if you're hanging out in the pro, be back instantaneously to talk some weird and wild paper on Options Oddities. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern. I'll be joined by Carley's nemesis, Dr. Vix, a.k.a. Mr. Russell Rhodes, as well as Scott Nations and other special guests to break down a wild week in vol. Should be a banger. And we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.